Is there friction working with them? Are there cultural differences?
I guess I shouldn't swear here, but we were like, no, we do not want that culture. And every year I was like, okay, someone's going to do it, someone's going to do it. And then 2017, no one had done it. And I was like, okay, fine, I'll just do it.
I give extremely nitpicky feedback on the fonts and the quarter radiuses and so on, to the point it's become a joke on the team.
Ignore the competition. It's not useful to think about it.
Welcome to Between Two Founders. I'm Jeff Seibert. I'm the founder and CEO of Digits. And over the past 6 years, we've built basically the world's first AI native accounting platform. We now work with hundreds of startups. Many of our clients are here in the audience. Thank you, to automate your books. And before Digits, I was the founder and CEO of Crashlytics, mobile developer tools product. We got acquired by Twitter. And then in 2015, I became head of product at Twitter, fortunately well before all the recent drama. But when talking about Between Two Founders, back in 2007, I can't believe it was that long ago, I had the privilege of running Stanford University's Entrepreneurial Thought Leader Seminar Series. And we had Reid Hoffman, we had Mark Zuckerberg, we had Vinod Khosla, and I'm so excited with Between Two Founders to now feature the next generation of world-class entrepreneurs. And so we had over 250 founders and investors apply to join us here tonight. So congrats on all of you who got seats. We only let in a small number of those. Really honored by the demand. And thank you for everyone who's watching on YouTube, Spotify. We'll be posting this and sharing this broadly. So today, we have an incredible serial founder. Please join me in welcoming Immad from Mercury.
Hi, everyone.
And I'd love to start off with just a quick background of your early career pre-Mercury. What brought you to starting Mercury?
Let's see. So I've been doing startups since 2006. I only ever had one job at Bloomberg. I kind of hated it. And I started kind of my first startup in London. It was called RevMap. It was kind of like a Yelp for London. That startup didn't really go anywhere. We didn't raise any money. But it really gave me this kind of startup itch. Like I loved making things. I loved being, I guess, the master of my destiny. And I decided I wanted to move to San Francisco. Back then, especially, the London startup ecosystem was very limited, and I felt like I had to be here to really pursue that fully. So I moved here. I did 2 more startups before Mercury. The longest one was called HeyZap. It was a developer tool in ad tech. It would basically help you optimize which ads showed up on your mobile app. We sold that in 2016, and then I started Mercury.
This is great. So we both went from mobile dev tools to fintech.
Yeah, exactly.
How did you get the idea to start Mercury? What was the problem you had?
Yeah. There's a few pieces. I was, as an entrepreneur that moved from London in 2007, I thought San Francisco and Silicon Valley was the future, right? And then you come there and, part of what you have to do is set up a bank account. And I was like, wow. For some reason, and actually I have some hypothesis, but in the UK, banking for entrepreneurs was much simpler, right? Lower fees, better apps, etc. So it was a very jarring experience to I had very high expectations that were not met. And that was just a continuous story. So, from 2007 when I moved here to 2013 when I had the concrete idea for Mercury, every year I would say, okay, hopefully this experience will improve. We just weren't seeing the improvements. And in the meantime, almost everything else you'd use as an entrepreneur had improved a ton.
Yep.
And it was really basic product. We're not talking about a high bar. I just want to be able to use a product and it works. But even beyond that, I felt banking could do a lot more. So back then we were moving a lot of money in my previous company because we had kind of a marketplace. And just being able to know a payment had come in, required someone to log in and manually do things, and sending out payments at the end of the month was super hard. So having an API, but I kind of had this concrete idea in 2013, and then every year I was like, okay, someone's going to do it, and then 2017, no one had done it, and I was like, okay, fine, I'll just do it.
Totally, and as I think many people here know, you don't just go start a bank in the US. That's not really the process. You have to go partner with an existing bank. And so tell us a little bit about that process. What did that look like? How did you sort of figure out the first steps?
Yeah, back in 2017, this was really a dark art, right? There was maybe 2 or 3 neobanks in the US. None of them were that successful. Even fintech, I don't even know if that term really existed in 2017. So I spent the first few months, like basically 7-ish months. I mean, I was supposed to be taking time off after I'd sold my company, but I have a hard time sitting down. So I spent a few months, talking to any entrepreneur I could find that knew anything about this, all the VCs in the space, all the lawyers in this space, and really figuring out like, what am I supposed to do here? And then by basically August that year, I said, okay, I have a plan. We raised 6 million, and Andreessen Horowitz kind of led the seed round. And then the first thing we had to do was go get a bank partner.
Right.
And actually, I went to Money 2020, which is the biggest kind of fintech conference, and I spoke to every bank I could find. There was about 60
Wow.
that I emailed. I think I had about 20 meetings there. So it was a really rigorous process because I really didn't know, and there wasn't like a pattern, right? There wasn't really even a partner bank ecosystem. There was kind of like a bunch of partner banks that had done one-off deals, and then there was a few that had done like a few extra ones. But it really involved me just meeting as many of these people as possible.
Yep.
And a conference is a pretty good place to do it, actually, because they're all there to meet people. And, we just raised from Andreessen Horowitz. So, there was a good kind of pitch to, get a meeting.
And so of those 20 you met, how did you ultimately pick one? Like, what were they offering you?
Yeah. The biggest restriction was I just knew what features we needed, which was I really wanted support for wires.
Mm-hmm.
I guess it's kind of a given now, but back then, when we launched, we were the first neobank to have wires at all. And then having immigrant founder support.
Yep.
So, I was an immigrant to the US when I first moved here, and I really wanted to be able to support kind of future immigrants. And, as we know, immigrants are, I think it's like 50% of unicorn startups, top startups are immigrants. So I thought that was a really important kind of feature. So just those 2 feature requests, basically cut out the vast portion of the field.
Yep.
But we eventually did kind of pick someone.
And what does that look like? So now, years in, how close are you with the bank partners? Is there friction working with them? Are there cultural differences? How does that actually pan out in reality?
In terms of culture, these banks are specifically setting out an agenda to work with fintech. So they're definitely they're the more creative kind of banks, but they're not technology companies on the whole. They're partnering with other people on the technology side. Or, some of them have built out kind of their own infrastructure, but that's probably the biggest mismatch. But I think as an early stage startup, you really don't have all the skills and to really even understand everything you need to do on risk and compliance at the start. And that's where, at that time we relied a lot on our bank partners and worked with them through that. Now that we are obviously a much bigger team, we've built our own kind of internal risk and compliance side. But I think in general, with any partnership, you have to kind of see them as hey, how do we be great together? And, what are you, you have to line up your kind of thinking with their thinking. And I think that's how you build a successful fintech company.
Totally. Makes sense. Let's talk about the software side. So a lot of companies sort of try to capture the money movement and then build out tools. Like Ramp has obviously done well with cards. You have launched Bill Pay. You just launched employee expenses. How do you think about that? Are you trying to drive software usage? Are you using the software to drive deposits? What's the balance in your strategy?
Yeah, I think this is kind of tricky, but when we think about any new bigger product, ideally it does everything. All right. So these are the 3 things you need a new product to do: attract new customer bases, or new sets of customers, monetize them better, and then retain them better. So this year we launched a bunch of things actually. So bill pay, invoicing, reimbursements, and personal banking, and all of those kind of do all 3 of those things. So in terms of acquiring new users, there's a whole set of people that want those tools, and either they have to use Mercury and use, I won't name all the competitors in the space, but there's a ton of people that do billing, bill pay, or invoicing, etc. Or they can just use Mercury and get everything. So that attracts new customers. Retention's obvious. If you're just banking, And banking is already a very retained product, but if you're now also integrated into a bunch of workflows at the company, that's much higher retention. And then lastly, these products all monetize. But we've set it up so it's got a pretty generous free tier. Really want it to be a no-brainer. We don't want it to be like, oh, I have to pay for this. Like, we want to provide a ton of value and then you pay for it as a natural kind of consequence.
Totally. I need to ask about accounting, obviously. How do you think about the relationship between the money movement piece and the accounting? And how do you think about your relationship with the broader accounting industry?
Yeah. I mean, there's two parts to it, right? There's the, roughly speaking, especially in the startup ecosystem, you can kind of think of accounting as like the digits side of it, like more software focused, and generally speaking, tech companies in that space.
Yep.
And then the other side is there's actually like a very large fragmented kind of industry of bookkeepers and accountants that serve startups and other businesses, as you know. And we work with both, but the set of tools are quite different. So for Digits, we have like special APIs that we build, and I know we're trying to improve those for you, Jeff. But that's I don't know how many other kind of banking services you work with that have any of those tools, but we try to make it so like a lot of the core data starts in banking and credit cards and bill pay, etc., but ends up in accounting, and the easier that flow is, the better. And then on the kind of non-tech accounting side, we have actually something else we launched this year was accounting integrations kind of workflow and platform. So you can be connected with QuickBooks, Xero, and NetSuite, and as a either internal or external kind of bookkeeper, you can tag the transactions, you can, make sure the receipt's there and do all of these kind of workflows all within Mercury.
Totally. And this is what we love about more tech-forward banks. Your team has gone above and beyond in improving the APIs for us, contrasting with sort of traditional banks. They barely have tech teams. They're working with ancient banking cores. It's really hard to get the data out in the quality you want.
Yeah, exactly.
Totally. Awesome. All right, so let's talk about sort of this Fintech winter. So things are going well, and then all of a sudden there's a ton of neobanks starting after you, following you. Regulators come in, VC funding sort of comes to a halt in the space. This future's uncertain. How were you impacted by that? Like, what happened as there was all this pressure on the market?
So funnily, I just tweeted this or posted it on X. I don't know what it's called now. But, there was Jason Lemkin did this post about these are the 9 companies that are like pretty late stage companies that are going to IPO when the window opens, hopefully in 2025. And 5 of the 9 were fintech companies. It's like Stripe and Klarna and a few others. But it goes to show you, like, fintech is huge. And actually, if you think about the next wave of startups that will IPO, hopefully Mercury will be among them. They'll probably be mostly fintech too, because a ton of fintechs were invested in 18, 19, 20, 21. I think during 21, it was like 25% of all funding was fintech. So it feels like a winter, but that's only if you listen to VCs. I really recommend, actually, I think the best time to start a company is when that space is in some sort of winter. Because if you think about it, I think the worst time to start a fintech company was 2021. Every single idea you could ever had 5 competitors instantly. They were all very well funded. There was no talent around, right? Hiring anyone in fintech was very, very hard. Whereas the last 2 years, great time, right? I think the hardest bit was convincing a VC to invest. But assuming you got over that hurdle, everything else was better about running a fintech company in the last 2 years. So, with these big spaces, I think it's much better to kind of formulate your own ideas on what is exciting, what are markets to go after and do that, rather than kind of try to follow hype cycles. But to come to your question, I think when we started in 2017, fintech was a relatively small space. There was only a few partner banks. As the space got more funding, a lot of fintechs came, a lot of partner banks came. And I think in 2022 and 2023, but it kind of started in 2022 with the crypto kind of failures. From a regulator perspective, I don't think they're startups that does crypto and works with partner banks and startups that are fintech and work with partner banks. they don't necessarily think of that as like completely different category. They're just like, oh my God, crypto failures. Like we need to like look at what's happening at these partner banks.
Yep.
So it started there, and there's just been a much more kind of aggressive kind of not regulation, aggressively looking at the space and going, okay, what's happening? Like, are we sure that these partner banks are doing the right thing, that these fintechs have the right controls in place, et cetera? And I think a lot of that is healthy. Like we've invested a ton, and obviously we've grown a lot, but we've invested a ton in the last 2 years in kind of making the team a lot bigger. So our compliance and risk team is now 20% of the company.
Wow. Okay.
And it's 15% of the product team. So we have a specific product team that builds risk and compliance products internally. And that really prepares us to go get another 200,000 customers and really scale in the future.
Yep, that totally. I've been dying to ask you this. So you sort of are in this winter, and then a year and a half ago, Silicon Valley Bank collapses, catastrophic to, I think, the broader ecosystem. What was it like inside Mercury in that moment? You sort of rallied your team to try to support as many of these customers as possible. Like, how did you sort of rise to the top there?
I think the tricky part was, especially at the start, right? It was like, okay, SVB is having all these issues. Like, why is Mercury safe?
Right.
Which is what like literally everyone was asking us. And we launched a product basically in like 2 days. Like we had the idea on Saturday and we launched it on Monday, which was, we called it Mercury Vault. It basically helped you visualize where your money is, how much FDIC insurance we had, and whether if you had above the FDIC insurance in deposits, whether your money was in a US government T-bills mutual fund, which we offered on the platform. And we grew our FDIC insurance with our partner banks. We went from 1 million to 5 million within a week. And that was really, I think, pivotal to our customers going like, hey, this is somewhere where I can have faith in a situation where there's like high stress, high risk, et cetera. And I think that made a big difference. It also was like, what is natural to us. Like we're product people. We want to try to build products that answer these questions. And I think that like gave people a lot of like assurance that we were like on their side. We were like speaking in the right way about their money. And that was, I think, why we did receive a lot of customers. And actually, 6 months later, 92% of them were still using us.
Wow, that's incredible. From a sort of just management team culture perspective for a moment, like how did everyone just like jump on it and work through the weekend? Was that something you asked folks to do? Did they just sort of naturally rise up? What was the like dynamic internally?
Honestly, it was extremely organic. We've hired a lot of people that are very customer centric. And I don't even think I was like, oh, everyone needs to work the weekend. Like that's not really my style. But we were already a 400-ish person company. And you've been at bigger companies. When you're a 400-person company, normally everyone's working on all sorts of different things, right? Like some people are working on something for now, and some people are working on future things, etc. So one of the it wasn't good, but like one of the good things about crisis is everyone's so focused on like, here's the one thing. And everyone was like, how do I help with this one thing? And it's just very obvious that this was the one thing. And that really like, in some ways it simplifies things as a CEO. It's like, okay, here's the one thing, here's the people working on it, here's what we need to do in onboarding, here's what we need to do in marketing, here's what we need to do in product. Like it just simplifies everything in some ways.
Totally agree. I am curious with Silicon Valley Bank. Honestly, candidly, their banking product was always a little mediocre. I had many friends at the bank and knew it well. What they excelled at was the relationships and sort of the customer dynamics. Did you have to change anything? How did you deal with that with a customer base that maybe was actually less product centric and more relationship driven?
We have a relationship management team, and I think through that period kind of ended up doubling it. So that's for our bigger customers that want to talk to people. I generally find that smaller customers don't really want to talk to people. I mean, I really don't want to talk to my bankers. Like, I don't know about you guys, but it's not like, I think generally speaking, and like this is actually like in my experience, like a bug in SVB. I don't want to be mean to them, but like their view on it was, how many touch points does my relationship manager have with this customer? And I was like, I don't want to talk to anyone. I just want to build my company, right? Like if the product is good enough, I don't have to speak to anyone. And that's like,
I'm a little extreme about this. I hate calling people, especially service providers. I hate calling service providers. I just want the product to work and not like me never have to like go talk to someone. So that was definitely like one of my motivations. I was like, okay, so anyway, come back to your question. For companies as they scale, they do want to talk to people, and that's very natural. And we have a relationship management team, and we scale that up. I would also say, we were already pretty big by the time this happened, and a lot of that had been us taking market share from SVB as we were startup focused and they were. So there was definitely like a inflection point here, but I mean, I think this is partly why we were able to handle the volume. If we were just starting out, there's just no way we would have been ready. But at this point, actually, it was a pretty big blip, but it wasn't like unfathomably big. It was like, it was maybe like 10x of a month kind of thing. And it was bigger companies, which are actually like in some ways easier to handle because our basic company is a tiny company with no website, and we have to figure out like what do they do, and can we safely kind of onboard them. Whereas these companies, well, they're already working with the domestic US bank, they already have a website, right? So much simpler customers to kind of work with in that way.
Totally. With the relationship dynamics, we've seen the same thing in the accounting industry. Most sort of recent startup founders, you don't really want to talk with your accountant. And the industry for so long has been geared only on the personal relationship. And every question you have, they have to answer personally. And so it's been the same thing. It turns out if you productize it well enough, you can actually free up that time on both sides.
100%.
Awesome. All right, we have to talk about AI because it's AI. How does AI come into play at Mercury? How are you structuring teams around it? Like, what is that impact for you? What you see going forward?
As I said earlier, I try to avoid hype cycles. So we haven't gone like, oh, we're all about AI. And I think actually in banking, and I'm sure you have the same thing in accounting. You can't be making hallucinations, right? You can't be like, wow, you have an extra $2 million in your bank account. Good for you. So at least on the front end user-facing stuff, we've been very deliberate and I would say slow about deploying things. I think there's a ton on the back-end side that people don't necessarily see. We have like a Slack bot that like has like all of our code base and like our engineers and everyone can ask it questions. We do a bunch of things with like looking at documents, categorizing things, all of that kind of stuff. In our CS, we've done a bunch of things to try to like, help our agents answer questions quicker. So I generally think of it as like a big kind of productivity boost. I'm sure there are like some AI features, and I actually think when AI gets even better and we have way less hallucinations, and it'd be cool to be able to go like, hey, tell me any suspicious transactions from last month, and it just like kind of populates it and is like very smart about it. So we're exploring some of these ideas, but we've mostly left it to kind of existing product teams. Kind of, we have about 25-ish product teams. So I'm a big believer in having kind of a smallish product team that's like 5 engineers, a designer, and a PM focus on some area. So we have a lot of those, and those teams kind of come up with their own roadmaps.
Perfect. No, it makes sense. We've seen, it's funny to see the whole batch of YC startups claiming, oh, I do AI finance or bookkeeping or whatever it might, FP&A has been a recent theme. And finance is not generative. You don't want any sort of GPT type model to generate your finances or your math. You can use predictive models a lot, which is we've been investing in heavily.
But people have been doing that for years.
Right, exactly. All right, I'm very curious. So most companies, you start the company and the direction of the company almost always only goes up market, and you serve bigger and bigger and bigger customers over time. And you went and launched consumer banking. How did that decision come out? What's the strategy there?
I don't know if it's an amazing strategy. I just wanted it for myself. So I think in general, actually, like feeling there's a really strong need and like following as a founder serves me well, at least. I post-rationalized it afterwards, of course, so I can tell you my post-rationalization. Basically, all of our business customers, often, especially, actually less so in the startup space, but we actually 60% of our customers are LLCs. You often are moving money between your personal account and your business account quite a lot, like almost daily. So having them in one place is a real benefit. And if you have a Mercury business and a Mercury personal, on the whole, the transactions are instantaneous. And then once people are really used to the business banking interface, it's really painful to go to your consumer bank. At least it was for me. Yeah. I think having it all in one place, having the same interface between the two, and that's actually, in terms of code, we didn't write that much new product. Like it's the same wires, it's the same user management, etc. So that's one part of it. I mean, I guess on the TAM side, personal banking is a huge market. And actually, entrepreneurs are some of the best personal banking consumers. Most of the neobanks on the consumer side were kind of focused on underbanked, and it made sense. There's millions of them, and they're underbanked. So, like, it's much easier to get a consumer underbanked that doesn't have a bank to use Chime, or there's a plethora of companies there. But founders and I guess other VCs that, those are the two segments that our personal banking serves, they're probably overbanked on the consumer side. But from my perspective, like the product need is just as great, right? Like it's just as painful to use your consumer bank. So that was kind of our thinking. And I would say so far it's been one of the most obviously hit products we've launched. It's just very obvious it has product market fit and people really want it.
That's awesome. I do imagine under the covers, the regulation's actually somewhat different between consumer and business. Were there any like unexpected challenges you faced?
I don't know if it's unexpected. Like we have a lot of people that are very familiar with consumer banking at Mercury. It is a lot of work. Like you have to have, I won't bore you with it, but there's a separate complaints procedure. There's a whole set of kind of compliance and risks that you have to follow. But we deliberately set it up so it doesn't scale super fast. It's still in waitlist actually, and being very deliberate about kind of scaling and like growing operations internally has been, I think, the right move there.
Awesome. All right, let's shift gears. Want to talk about leadership. So you've mentioned a few times your team's quite large. How big is it now?
750.
750. And so how do you view that? What's your leadership style? What sort of lessons have you learned for folks who are scaling their businesses?
I feel like I still have a lot to learn. So let's see, lessons learned. There's so many. I think I go through phases. So I'll tell you one that I think is like true all the way through, which is like as a CEO, you still have to do things that you actually enjoy doing. There was a time at Mercury where I basically was like, oh my God, like we're scaling. I have to go hire a bunch of people and I have to focus on hiring, or I have to go focus on kind of people management, etc. And I don't mind hiring, but hiring and people management does not give me personal energy. And after 1 year of doing that, I was like, wow, this is like kind of awful. All I'm doing all week long is things I don't really enjoy. So I had to kind of step back and go, okay, what do I actually enjoy and how do I prioritize that? And what are the processes I should set up for that? So obviously there's times where you just have to do things that are grind that you don't enjoy at all as a CEO, like fundraising or something. But I think you have to, at least in the longer time horizon, prioritize putting your time there. And I'll also find, so what I enjoy is talking to customers and building product. But those are also the things that like I'm good at, which is why I enjoy them. Okay, so it's important to do the things you're good at. That's why you're there. So that's a lesson that I'm like continuously kind of learning and rediscovering.
Totally. I feel exactly the same way. Like the more time you can spend in the product, talking with customers, really trying to push it forward, it's just so much fun.
Yeah.
What's the hardest leadership lesson you learned as you scaled? Like what's a mistake you made along the way?
One thing that I would say we still struggle with it is, I really want to believe in people, and in general, I feel like anyone can do anything, right? Like I'm very optimistic about people, and it's all, as Mercury has scaled, we've had early people that I'm like, okay, you were great, like here's more responsibility, or like we're just bigger, so there's more responsibility associated with the role, and I really want them to grow into it. And unfortunately in a startup, right, there's no, especially when you have to grow into a role, you don't always have people to learn from. Right. Like you kind of have to figure it out. And some people can figure it out and some people sadly can't. And that's something that, I for a long time thought everyone could figure it out. And that probably meant that, we had people around for longer, and it wasn't great for them either. Like they were not in a role that they could thrive in. So that's always been, a thing that I have had to learn.
Is there anything from your sort of earlier startups that you intentionally carried forward or didn't carry forward, changed with Mercury?
I mean, in my last startup, like I started this, bear in mind, like 8 plus 8 years, 16 years ago.
Yep.
So I was much younger and, way worse at all this. One big thing that we didn't do is really care or think about culture. Like we would just hire the first person that could do the job from a skills perspective. Like we'd be like, oh my God, you're an engineer, here's a job. Or same thing with salespeople. And that was awful, right? The culture was very organically developed and like very like alpha bro kind of culture. And it was very much not me at all. And at Mercury, actually, I started Mercury with 2 people that I'd worked for 5 years at my previous company. So we all like, I guess I shouldn't swear here, but we were like, F no, we do not want that culture. So we were very, very deliberate because we'd seen where it went. It wasn't the worst thing, but it was not great. But we wrote down like, what do we really care about? And, all 3 of us had a lot of similarities in what we cared about. And it's really, like we did that when we were only 4 people,
Nice.
which I think is really valuable. It wasn't that complicated. It's like, we wrote down 6 characters that we cared about, and then we tried to come up with kind of interview questions and other ways to kind of filter against those. But 4 of those 6 attributes we still have. We added removed 2 and added other 2. But like really being very deliberate about culture and hiring against it, I think that was the biggest miss on my previous company and thing we got right here.
Totally. We've a couple more prepared topics, and then we're going to open it up for Q&A. So start thinking about what you're curious about. Any topic goes within some relevance. Let's talk about more of the personal side, the family side. Obviously, starting a company, scaling a company takes tremendous amount of time. How do you balance that in your family life? What's it like being a dad during this? Like, how has that gone for you?
Yeah. So I have 2 kids, 13 and 7. So I had my 13-year-old after I'd raised a Series A in my previous company, which is a 3 million Series A. That's how we used to roll. And then I had my second child in the sabbatical. I think in general, when I was younger and pre-kids, I would be working like 12 hours a day, 6 days a week. And then, when you have kids, it kind of makes you go like, hey, like I want to be a very present dad. So I try to not work in the weekends unless, there's a big banking crisis or something. And same like evenings, obviously I'm here, but in general, I try to be present with my family. And I realized actually like on the whole, I wasn't actually that productive for like the 12 hours, 6 days a week. I was, you kind of, if you're just sitting in front of a computer all the time, you're kind of on Hacker News or Twitter and you're doing other things. And you pretend that you're working all the time, but I actually talked to someone recently that were like, oh yeah, I work 16 hours a day in this finance job. I was like, okay, what are you doing? And they're like, yeah, I'm waiting for them to tell me to do this. And I'm just on. Anyway, I was like, okay, that's not really working. But I realized basically like if you actually really, really try and be extremely productive for 10 hours a day, 5 days a week, you're probably just as productive, in my opinion. Yep. And other people are probably different. So that's one big thing. And then you have to have a very supportive other half. And thankfully, my wife is like, she's like she kind of gets it. She's doing her own startup now, actually. So I guess I should be supportive of her more. But that really helps. I think having someone who's like willing, because at times you are not present, and they really have to step up, right? Like I think it's hard if like both of you are going to be workaholics. I think it's not kind of great for the kids, but those 2 things. But it's definitely harder. It's like doing life on hard mode. Right. But like I think that's why we do startups, right? Like we life on hard mode. I could have done something easy after selling my previous company, where I was like, okay, let's do this again.
Totally agree. How do you think about
See, this guy's doing life in hard mode. Yeah. He feels it.
How do you think about travel? Because now like you could be at conferences, I'm sure, every other week or meeting with partners or whatever. How do you decide what to prioritize, like what to say no to?
Oh man. Generally speaking, it helps for us because I can't get that much productive things out of a conference, right? Yep. I think it would be much harder if we were like a B2B enterprise company, and then I could be going to conferences every week and going, I'm doing something productive. For us, most of our customers are small when they start with us, and we get thousands of them, so I can't possibly like go talk to them at conferences one by one. It helps to also be in San Francisco. There's so much that happens here that like I can, it's much easier to go to an event like this here than if I had to fly here. But yeah, I think you just ruthlessly prioritize. I think on the whole, conferences is kind of make-believe work. It's very rare that it's actually like that productive. I think you can achieve something fairly similar just by, like if I tweet, I get 50,000 viewers on it, right? Or like a LinkedIn post has like 20,000 people look at it. So you can have like a pretty large impact just online. I don't know if you need to go to that many conferences, at least for us. I think it's different if you're a B2B SaaS company and you have to make your own kind of trade-offs there.
What's next? What are you excited for as you look ahead into 2025 and beyond?
Oh man, I'm really a product entrepreneur, so I always get excited about like the new flashy things we're going to launch. Unfortunately, I can't tell you about any of them, but they're going to be super cool. Watch out. But also, actually, this year we did launch a lot of stuff. So I think a lot of next year is actually refining these things. There's a ton you learn, but actually having users use it.
Yep.
Like our personal banking didn't have joint accounts. I mean, not that we didn't know we should do them, but we just hadn't done them. But we're about to launch those soon. I think I can give that away. But yeah, there's tons of like improvements to do with all these products. It's fun to kind of see the usage and go like, oh shit, we should go build this bit. That's what we're doing.
Awesome, fantastic. I want to open it up to the audience. What can we share? I would say please try to be brief with your questions just so we can get to a lot of folks. Let's go. I think you were first here. And we do have a mic, so wait for the mic to come around.
Sorry, I wrote it down so that it would be brief. Thanks, Jeff and Immad, for doing this. My name is David, and I'm a first-time founder. My question is for both of you, and it's about fundraising. I get the sense that it's a bit like speed dating, where the goal is to get married and you can't divorce. So how have you navigated this through your startups and throughout the different series of your companies?
The marriage analogy only really matters for the lead investor. I mean, I think if you have a bunch of small angel investors, and Mercury had 60 investors, I can talk about why it's useful, but those relationships can be a little more transactional. Like you don't need to go do a ton of like relationship building. Many of the investors I had, and I know other entrepreneurs have, are like after a 30-minute conversation, it's like, we're in for 10K, and I'm like, yeah, let's go. So that is not a marriage. I think the lead investor, you really want to spend time, and ideally you've not just met them for the first time during this fundraise, you've built a relationship like over at least 6 months or something. And then you like go talk to the founders they've invested in, especially the ones that like where the company failed, and you see how they behaved. There's lots of tools nowadays online even to like try to do research on people and like try to understand their reputation. But yeah, I don't know if I quite answered your question.
I would say, just a few thoughts. Definitely for your lead investor, I would pick the partner, not the firm. You really want to identify like an individual you work well with, collaborate with, respect their feedback on, et cetera, et cetera. It's also broadly a psychological process that you're going through. They do not have enough time to make a fully rational decision on the market you're going after, right? Like most of these firms are talking with tons of people, and a lot of it's done on instinct, particularly on the West Coast. East Coast investors can be a little more sort of numbers-driven, model-driven. And so because of that, you really want to create an environment where they're excited, you're pitching this big opportunity, and there's some fear of missing out on the round because that's what drives the psychology. I would also say, as you think about structuring it, like decide, obviously, do you want to raise on a safe or a priced round? Do you want angels in the round? Like be intentional about it and be clear, because then you'll build confidence that you know what you're doing. They'll sort of see how they fit in the round. So just a few thoughts for you. I think the other one was here. So yeah, let's go over here and then we'll come back.
Hey, Immad, would love to learn more about the journey from the first company that didn't work out to the second one that did.
The first to second, so I did this company, and the only thing I learned, so back then, this was 2007, I learned that like being an engineer and wanting to found things was a rare thing in London. Like basically everyone there was like a business person and they wanted to start a startup. Before that point, I didn't really, like I was an engineer, but I'd kind of just done it because I was good at it. Like I didn't necessarily, and I enjoyed it, but I didn't really value it as like a skill. And then I became an entrepreneur. I was like, wow, I'm like hot commodity in this space. And not showing off like I was, but like really any engineer that wanted to found things was actually very valuable. So what I did for my second startup was I was like, okay, here's all these people that have ideas and money and don't have an engineering co-founder. I was like, okay, let me pick between them. And that was really my process. I was like, someone moving to San Francisco that needs an engineering co-founder. And then I like tried to pick the best company between those. So that was, and not the main thing I learned, but one of the things I learned.
Why don't we go right next to you, MJ?
Hi there. My question is, in the bootstrapping phase, do you have any recommendations on how to convince folks to leave their full-time jobs and join you in your mission?
I think I don't know if Jeff has better luck with this, but I found it was very hard to convince anyone, even after we'd raised $6 million, it was very hard to convince people to leave their job to join a startup. Like essentially a startup is kind of a rational thing to do, especially if they're like really good and they work at like a Google or Facebook or whatever. They just get paid a lot. Startup is all risk. So you really need I found the two sets of people it works to get is someone really junior that has like super high potential, right? That's straight out of college. They're excited about it. They don't have any downside. And actually the comp that you give them might still be lower, but like you give them so much more responsibilities and they're not getting a ton of money elsewhere anyway. So junior people, and there's you have to be kind of selective, obviously, but there's amazing people who just got out of college and you can find them. And especially actually in this market, they don't have that many opportunities. And then the second one was people that just really knew me, that I'd worked with before, and that they were really betting on me. But anyone in the middle space, I found on the internet or something that had a good job was at least I found it very hard to persuade them.
I've had the exact same experience. If people are at one of the big companies for the comp, it's going to be really hard and probably not worth your time to try to persuade them to join. I would also go junior, look for people with super high velocity, high rate of learning and growth, and take the bet on them. They'll have the energy and drive. And I think in my experience, it's self-selective. If the person wants to join, they understand the startup journey and are all in. If they're on the fence, read that as a sign, right? Let them opt out, because you don't want them to, in 3 months, realize, actually, wait, I wanted the stability, I wanted the salary, whatever it might be. Over here, come
on. Thanks. Can I have 2 quick questions? One for both, one for Immad. Where is Mercury in 10 years? And for both of you, how do you guys consume media and content?
So the question was, where's Mercury in 10 years? I feel like it might sound too grandiose or something, but I think I feel like banking is, even now kind of dominated by these incumbents that don't know how to build technology products. So it seems obvious to me that in 10 years, most of banking services will be provided by technology companies. And I want Mercury to be one of, if not the biggest company in that space.
Totally. For media, some people here may know I was in the Social Dilemma documentary post-Twitter about media consumption and so on. I actively don't consume much media. I don't watch any movies. I don't watch TV. I don't watch any shows.
What do you do?
I code. I do read Twitter, LinkedIn, Threads now, and get tech news and so on, tech meme and so on. But I sort of actually actively don't consume things because there's so much going on already. I sort of don't want other random thoughts and random other drama to worry about. I just try to go really deep and focus as much as possible.
Well, this guy's a saint. I like all sorts of media, but I really like intellectual things, so I read a lot of books and I'm on Twitter all the time.
I will be this drives our team nuts because they make movie references and like I have no idea what they're talking about. And I even shut off animations in Slack, so anyone posting GIFs, I don't see them. Because it's just
You're like, they don't make sense anyway.
Yeah, exactly. Yes, right here.
You know, to build product, you go to talk to your customers. And what advice could you give us how to find the right distribution channel?
You said to build product, you have to talk to customers. Yeah. The right distribution. My general take on it is if you, I know this is probably like a little extreme, but if you have real product market fit, like customers will really want what you're building. So it'll be easy to find them. I actually find that if distribution is too hard, that means like you probably don't have strong product market fit. But you still have to try really hard just to make sure you don't have strong product market fit. But there is to some extent it shouldn't be that hard to distribute. It's almost the definition of product market fit is that it becomes easier to distribute. But you have to kind of go talk to people to discover this doesn't work, and then probably pivot or like move around that space a little bit to actually make it work. So that's one element. I guess the second thing is I personally find that try everything is my general approach to distribution. So, whatever things you can imagine, right? Like there's, how do you encourage like word of mouth and organic, and maybe you give a referral bonus or something like that. Do paid marketing on Google and Facebook and all that kind of stuff. Do events. Obviously, for whatever you're doing, there'll be some set of things that make sense. But yeah, I would say try everything, and then if something's working, there's good ROI, then you double down and you invest more people and money or whatever into it.
I can give a couple quick examples. So I've worked in a couple very different industries, like we're selling developer tools. Then obviously we're targeting founders of early stage companies. We also sell to accounting firms. Very, very different go-to-market distribution motions. The biggest thing I would say is you need to deeply understand your customer and really know where they get their news, what media they watch, where they hang out. And so developers for Crashlytics, we were buying display ads on Stack Overflow. This is back in the day, right? For founders, obviously we do events like this, it's very effective. For accounting firms, accountants go to a couple conferences a year in the US, and it's completely a word of mouth network in these small Facebook groups. They have all these sort of expert knowledge sharing groups on Facebook. And that was a huge process to really understand and figure out how we penetrate that. And now we go to these conferences, we sponsor some of the big ones each year, and we've gotten tremendous name recognition in the accounting industry that none of you would ever hear about because you're not in those groups. And so you have to be super intentional about how you target everyone.
I would also say at the start, just do things that are not scalable, right? Mm-hmm. I don't know if for Digits, events like this will be overly scalable when they're in 2 years' time, but right now they make sense. And we did all sorts of things that, probably didn't make sense today at our scale, but made a ton of sense when we first launched. So you I don't think it's worth trying to build scalable channels from day zero. You just do whatever it takes, and then you kind of do something else when that stops working.
Let's go here.
So you build a bank for immigrants and have this recent problem with immigrants in your bank, and I don't know if you feel comfortable to sharing about how you feel about that. What was the challenge? Why your bank had to face that challenge?
Well, firstly, Mercury is not a bank. We're a fintech company that partners with banks. Originally when I started Mercury and I said, hey, I want to serve immigrants, I actually thought it would mostly be people trying to move to the US. So, that's what happened with me. I was like, hey, I want to move to the US and I don't, I'm trying to get a visa, etc. But my intention was to move to the US. And that's kind of the type of immigrant I thought we would be serving. We ended up serving, actually, there's a large set of people that have US companies that don't live in the US and don't intend to. And I actually think COVID kind of made that whole trend even more so. So we serve people in probably 100 countries. Unfortunately, there's a few countries that are just higher risk. And there's a series of things that cause higher risk. There's sanctions on a large set of people in the country or regions. Or there's other countries where there's just way more fraud that we see. There's also countries that are on kind of high risk, AML risk and all these kind of things. So we used kind of a large set of these kind of factors to decide which countries we can and can't serve. So recently, I think we added 7 or so extra countries to the list that we can't serve, and we had to offboard those customers. I felt pretty bad about it. Actually, Pakistan was one of the countries we ended up offboarding, and that's where I'm from originally. But unfortunately, it was like to some extent there's a business decision, like there's a risk that we take in serving kind of those set of countries, and it was we weren't necessarily making a lot of money from it, and it just didn't make sense to continue doing it.
Here. Yep.
Thank you. My question is about management. We're a team of 30 now, scaling. Where do you stand on the spectrum of being the manager that gets out of the way, hires smart people, and just delegates as much as possible versus being in as many details, as deeply involved as you can? And do you believe it even works to like let things go completely?
My take on it is that that's a false dichotomy. And I think like people kind of miss that about the whole founder mode thing. Like to me at least, and maybe I'm wrong here, but you want to hire great people and give them a lot of responsibility and delegate almost everything. But at the same time, you want to be extremely in the details and work alongside them. And how you do that is by, when you're in the details, you're basically saying, I'm a member of your team. Let's work together to solve this. That's very different from like, I'm micromanaging you. What are you doing? Oh, do this next, do this next. It's not, to me, that's not like being in the detail. Being in the details is like, oh, let's look at this Figma. Oh, what about this? Like, why don't we build it like this, right? That's being in the details. Or, I don't know, whatever it is. If it's sales, then you're like going and sending the emails yourself. You're talking to people yourself. Like, I think you can be very detail oriented, but still be extremely delegative. Delegative, is that the? But yeah, I know.
I could not agree more. That's exactly right. The way I describe it is like, I want to be involved, if you think of like the trajectory of a project, I want to be involved at the start as like, okay, let's set the direction together and figure out what our goals are and how we're going to achieve them. And then I want to be involved in the like detailed polish and design phase and so on, but it's the mindset thing. I totally agree. You're not like telling your team what to do. You're like, let's hop on a Zoom or meeting or whatever and like brainstorm this and whiteboard it and like look at these pixels. And like, I give extremely nitpicky feedback on the fonts and the quarter radiuses and so on, to the point it's become a joke on the team. But it's like, you care about that perfection and you care about the strategy and give them the sort of psychological safety to execute like the in between. Let's go over here.
Hey, thank you. I just wanted to say I was surprised to see like both of you were doing like DevTools startup before. Do you have any learnings or advice you can share with like DevTools startup founders?
I have a crisp one from Crashlytics. Never tell an engineer they can't build your product, right? You do not want to position your product as something like, oh, this is so fancy they could never do it. That's a challenge. They will go and try to clone your product. And so we very quickly learned that. Instead, show all the attention to detail you have, show the complexity you've brought to the table, show all the value you can bring and the time you'll save the developer. And then you create this mindset of like, oh yeah, I could go build that, but you know what? I won't. I'll just use this.
Yeah, engineers are like some of the most annoying customers. I think I would say one thing that engineers really respect is like shipping velocity. And if you listen to them and you then go build what they say and you show it to them, that will like really get them to love you for life kind of thing. Because I think engineers are like used to dealing with a lot of tools that don't really do anything, that don't improve, that don't like fulfill their needs.
They're used to the computers always being wrong for some reason, right? So like if you can polish your product to where it's really simple and easy and it does what they expect when they expect it, they're like, okay, that's good software. Here.
Hey guys, thanks for taking the time to speak with us today. I was wondering, how do you position yourselves? Because both of you are in pretty competitive spaces, right? There's a lot of options for different consumers and clients to use. So how do you think about competition and what do you do internally and externally on managing that?
How many people here use Mercury?
Awesome.
See, it doesn't seem that competitive. I think generally speaking, actually, like my take on it is like ignore the competition. I think it's not useful to think about it. If you go talk to a bunch of customers and like say like, hey, what do you need to use this? They'll basically educate you about the competition, but you don't need to talk about the competition at all. You can be okay, what feature is this missing? What would we have to build to get you to use this, or whatever it is, right? Like, I think talking to customers and building and solving their problems is just vastly superior to trying to like look at what a competitor does. And I think I should really memorize this phrase because I say it all the time, but like comparison is the root of all unhappiness. I feel like that's true in all parts of life, right? If you're always looking at something, you're like, oh my God, they raised more money, or like, look at this feature they launched, why don't we have that? Like, I just think it's not only like a bad strategy, it's also demoralizing at the company to be like always looking at things. So I tend to like massively de-emphasize it. I think as a CEO, you kind of have to think about it, especially when you're talking to investors. Investors ask you about competitors all the time. It's super boring. But when you're running the company, I think it's better to actually just not think about it too much.
Yeah, totally agree. For investors, like make sure you have an answer, you have competition. If you claim in your slide deck you have no competitors, that's like a huge red flag. So just make sure you know who the competition is. But I agree, internally, it's not relevant. Build the product your customers want. I'll give an example from just the accounting industry. Like QuickBooks is entrenched. They've had 80% market share since 1992. And like, that's fantastic, right? Like there's all these other startups trying to do AI accounting and so on. That's awesome. The moment anyone considers something other than QuickBooks, they'll come talk to us and they'll look at us, right? The battle is only getting them off the entrenched competitor. And so any other startup competition is fantastic news. Yes. He's coming.
Could you share some of those stories about how you onboarded those first customers, those unscalable things that you did?
At Mercury, so the first set of unscalable customers were like people I'd invested in, because it turned out like seed stage companies that would use Mercury. If I was an investor, they kind of trusted me. They didn't put all the money in Mercury, to be fair. This was before we kind of launched. As to be clear, I didn't like force them to do it. I was just like, hey, I'm doing this new thing. Are you interested? And like that was our first kind of 30 or so customers. And then after we launched, actually, like weirdly, tech influencers were a great distribution source for us. So I had 60 investors. Many of them were kind of tech influencers. The top three that were, I think, drove the biggest initially was Andreessen Horowitz has a Twitter thing. Justin Khan has a bunch of followers everywhere, and then Elad Gil. But those three actually like really kicked off the kind of distribution flywheel for us. And it was only like a couple of tweets.
Same exact thing. It's going to be your network. I mean, Crashlytics, the first few users were literally my friends who were building apps, and I was just like, hey, put this in and like see what it does. For Digits, it was the same thing. It was a bunch of my angel investments. I asked very nicely if they would use us.
Oh, you did that too?
Oh yeah, 100%.
Wow.
And same strategy with the fundraise. We had 72 angels on our first round, and the goal was literally like I tried to get all the different seed investors, random VCs I know, to just put in money personally, not even through their funds, so that they were then bought in to sort of distribute us to their network when we launched. So you want to think about this way from the beginning when you start the company of like, who's your customer going to be, and how do you just like make friends in that space so then you can ask favors. Yes.
Thank you for today's session. Just a quick one on building for enterprise mid-market startup. I think Digits and Mercury is building SMB Startup Focus. Like, how do you think through that on which market to target first and your approach with that?
I really like starting in SMB. You can be very product focused, and I'm a very product focused entrepreneur, and you can build a great product. And I feel like with enterprise, you end up like building to what they want rather than like building to what you think is the correct solution, if that makes sense. I also think like, yeah, you're forced in SMB to be like build self-service from day zero. I have found, and I don't know exactly why, but if you build that self-service, you can always go enterprise. It's very rare for enterprise companies to build a good self-service motion. I think it's because like it's actually really hard to serve tiny businesses at scale. So you become like really good at like making sure they don't like email you support things about basic things. Whereas when you're serving big customers and you have like 20 of them, you can basically like almost hire, one person for every 4 of them to like manage them and help them and answer all their questions. So like it's such a different thing when you have to like then reframe to the bottom of the market. So I really like it. And actually, weirdly, VCs actually hate SMB and consumer. But if you look at it, almost all the really, really, really big companies, I mean, apart from maybe Salesforce, are either SMB or consumer companies. So I think it's like a pretty good market to go after if the TAM in that SMB space is big enough.
My first company, way back in 2008, we were acquired by Box, and Box was sort of the enterprise file sharing. And I was always very jealous of Dropbox because they had such a great self-serve product, and it was easy and clean and so on. And so that sort of influenced for Crashlytics. We just went like pure grassroots, like almost B2C developer focus. And then ultimately, like Nike used us, Uber used us, Viacom used us, all these massive companies used us because we had built it and made it easy enough for anyone to use it. And so I think it goes back to you as a founder and your personality. I love serving just like as many people as possible versus a handful of big companies. If you have a background in enterprise sales, you probably want to lean into that and do enterprise sales and then figure out how to shape the business. So it's up to you.
It's also very idea dependent, right? Like I think for Crashlytics and Mercury and probably Digits, and, broad-based plays make sense. If you have a very specific niche idea, it might not.
Let's do, we're perfect timing. Is there one last question? Okay, there it is.
How do you guys, I guess, think or were thinking about going into sub-niches? Like, I imagine you have many different industries or different niches that you could serve. Have you ever thought about to compete with these big companies going to like, market specifically to, let's say, e-commerce or apps or like, maybe some other local service businesses?
I mean, when you start, you've got to be so specific. Like, and Mercury it's a business banking service. Any business could use it in theory. We were all about like the tiniest startup ever initially, and that was really the root of it. And the reason it worked and the reason that was exciting is that tiny startups have a bunch of, A, there's always new ones, so you've got this like replenishing market. B, they tend to kind of work in networks, so they talk to each other and they distribute the product for you. And then C, they grow and become bigger companies. So obviously that niche worked for us, and now we serve like companies with a few $100 million in their bank account. But we really started like very, very small focus, and that was like a very deliberate choice. And then actually, I like going like start very tiny and specific, and then like keep, when you start seeing some distribution elsewhere. So during COVID, we saw a ton of distribution in e-commerce, and then we doubled down on that like inherent kind of distribution. So, I mean, I like it if you can like start really small, but be open to other things so you can see where your organic demand is.
Yeah, you need to hold both in parallel. Like you as a tiny startup can't afford to do anything other than like one focused thing. So pick that one market, have your vision of how that expands. And so like as a concrete product thing, there's nothing about Digits per se that's like focused only on venture-backed early stage startups, but that's the market we've started with, so we know we can nail that. And we have this vision to expand to broad SMB, and that'll come in time. And so you want to basically like focus but hold the broad strategy. Awesome. Fantastic questions. Really appreciate it. Immad, any closing thoughts for the group?
I actually have a podcast that I'm always like, I should always talk about my podcast. It's called Founders in Arms. It happens weekly, comes out on Fridays. So you should check it out. But this was fun. Thanks for having me.
Thank you so much for joining us, and thank you, everyone.